Welcome to FinTech TV, the biggest roadblock. Welcome to FinTech TV. The biggest roadblock keeping traditional banks off the blockchain has been privacy. The same transparency that makes the technology so revolutionary is often a complete deal breaker for institutions bound by strict compliance.
That will help ensure a lot more broader institutional adoption of stablecoins, especially as it relates
Thanks, Remy. Here's a look at your crypto daily download. Binance is tightening rules for token issuers and providers of liquidity on the platform following criticism of digital asset market practices during October's market meltdown. The exchange said that crypto projects cannot have any revenue sharing models with market makers, and that market makers also cannot engage with projects to manipulate prices or distort liquidity of the tokens. Binance added that crypto projects are required to report to Binance about the details, legal entity, and contract terms of the market makers they're working with. Well, the UK government is advancing plans for a moratorium on political donations made through cryptocurrencies. Cointelegraph reported.
Still to come this hour on Market Movers, a look back at this week's Digital Asset Summit 2026. And you probably haven't heard, but there's a security that's ripped well over 1,000% since its New York Stock Exchange IPO last week. We'll get the fund's CEO's thoughts on the moonshot. All that and more when we return.
Welcome to FinTech TV. Here at Digital Asset Summit 2026, tokenization dominates. Welcome to FinTech TV. Here at Digital Asset Summit 2026, tokenization.
Fundrise's growth tech fund has spiked over 1,000% over the last week. We'll get CEO Ben Miller's thoughts on this when Market Movers, the opening bell returns. Now that the markets have opened, we'll get a capital markets update for you from Bankrate economic analyst Sarah Foster, live on the floor of the New York Stock Exchange, when Market Movers comes right back.
Live from New York, you're watching Market Movers, the opening bell. Well, Wall Street is in the red this morning with Dow futures off by nearly 350 points this morning. All eyes remain squarely on the Middle East conflict. Now, earlier this morning, President Trump saying Iranian negotiators better get serious soon before it is too late. Now, efforts to end the war in Iran show few signs of meaningful progress so far. And the OECD is sounding the alarm concerning the global economy, warning of a major setback to growth as well as a jump in inflation if the energy crisis worsens. Now, mediators are pushing for a meeting between the U.S. and Iran as soon as this week. And at the same time, Iran dismissing the 15-point peace plan to pause the war, which is about to enter its fifth week. And this is causing oil prices to rise this morning. We are looking at WTI and Brent higher by at least 4%. Now, officials from Pakistan who delivered the 15-point plan to Iran said it contains sanctions relief and an end to the country's nuclear program. And Iran issuing a counteroffer. Now, this peace deal has 5 points, which include stopping attacks on its leadership as well as reparations for the war and Iran's sovereignty over the Strait of Hormuz. Now, tracking data does show several vessels have passed through the strait as Iran says it will charge a fee to ships that want to do so. And Trump saying this morning that Iranian negotiators are acting strange through their public comments. He warns them to get serious soon before there is no turning back. Meanwhile, Gulf states have issued a joint statement condemning Iran's attack on their energy infrastructure. Some of these countries do include Saudi Arabia, Qatar, as well as the UAE, and they are signaling they have the right to self-defense. And separately, Trump announcing a new date for his meeting with China's President Xi Jinping. Trump set to travel to Beijing on May 14th and 15th. Meanwhile, Trump postponed the meeting that was set to take place next week because of the war with Iran. In terms of the latest U.S. economic data, initial jobless claims rising over the past week. Weekly jobless claims coming in at 210,000, and that's 5,000 above the previous week, but in line with forecasts. The 4-week average was little change, coming in right above 210,000. And continuing claims falling to their lowest levels in around 2 years. A number of Federal Reserve officials are set to speak later today. And mortgage rates just hit their highest point in 5 months. Escalating borrowing costs caused overall mortgage applications to slide 10.5% last week, and refinance applications took an even bigger hit, dropping nearly 15%. The Mortgage Bankers Association reports the average 30-year fixed-rate mortgage climbed to 6.43%, up from 6.3% the week prior. Now, analysts say the spike is directly tied to the war in Iran, which has triggered energy inflation and also did hopes for any near-term rate cuts. And in company news, we are seeing chip makers dropping this morning after Google unveiled TurboQuant. Now, this is an AI memory compression algorithm, and we are seeing Micron fall as TurboQuant threatens to sharply reduce how much memory and bandwidth AI systems will need. Meanwhile, in Asia, Samsung and SK Hynix falling today as the chip maker sell-off picks up. And separately, the U.S. Postal Service is looking to hit customers with a temporary 8% fuel surcharge on packages and express deliveries. The agency says the hike is needed to combat soaring transportation costs. Now, oil prices have jumped more than 40% since the U.S. and Israel launched strikes on Iran last month. And in earnings, Jefferies Financial missing on estimates despite record revenues across various segments. The firm took a $30 million pre-tax loss tied to the collapse of U.S. auto parts supplier First Brands Group. But Jefferies also saw solid strength in investment banking as well as underwriting. And ahead of the market open on this Thursday morning, we are looking at U.S. stock futures pulling back sharply. Right now, we are looking at the Dow Jones futures pulling back by a little over 0.7%, while we are looking at NASDAQ futures in the red as well. Right now, the NASDAQ is pulling back a little over 1%. As for the S&P 500, we're also seeing red across the board this morning. We are looking at futures pulling back by a little over 0.8%. And not surprisingly, bond yields are back up this morning. We are looking at the 10-year yield hovering right above the 4.37% level. And we are also looking at red this morning for crypto majors. We are looking at Bitcoin down below the 70,000 level, and ETH is also falling this morning. We are looking at the other crypto major hovering below 2,100. And separately, lawmakers on Capitol Hill are wrestling with the future of crypto tokenization, but the debate is being overshadowed by ethics concerns. During a House Financial Services hearing yesterday, both parties agreed that tokenized securities need the same regulatory guardrails as traditional markets, and this does align with SEC Chair Atkins, who is preparing a new innovation exemption to help digital asset firms test these technologies without facing immediate registration hurdles. At the same time, TradFi is not waiting for Washington to catch up, and financial giants, including BlackRock, Invesco, and Franklin Templeton, are already charging ahead with major tokenization partnerships this week. And for a quick look at commodities and precious metals, gold is down over 1% in New York morning trade and is currently hovering below the 4,500 level in terms of spot prices. And oil is moving higher this morning. We are looking at WTI up over 4% and is holding right above $94 a barrel. For more headlines, let's go across the trading floor to Jane King. Good morning, Jane.
Thanks, Remy. Here's a look at your crypto daily download. Binance is tightening rules for token issuers and providers of liquidity on the platform following criticism of digital asset market practices during October's market meltdown. The exchange said that crypto projects cannot have any revenue sharing models with market makers, and that market makers also cannot engage with projects to manipulate prices or distort liquidity of the tokens. Binance added that crypto projects are required to report to Binance about the details, legal entity, and contract terms of the market makers they're working with. Well, the UK government is advancing plans for a moratorium on political donations made through cryptocurrencies. Cointelegraph reported that the Rycroft Review, an independent inquiry into foreign financial interference in the UK's political and electoral systems, recommended a moratorium on crypto donations to political parties. New statements from UK Prime Minister Keir Starmer have confirmed that they will pursue the temporary ban. Well, Visa announced it will join the Canton Network as the first major global payments company to serve as a super validator to help extend privacy-preserving blockchain infrastructure to banks and financial institutions around the world. Visa will be one of 40 super validators on Canton. As a super validator, Visa will help clients who choose to run and secure operations on the Canton Network, applying the same trusted and reliable standards it uses to operate critical payment systems today. And the House Financial Services Committee held a hearing on tokenization yesterday amid a growing push from crypto firms and traditional finance to bring tokenized securities to market. The SEC has greenlit several entities to move forward with tokenized securities, while also asserting that those assets are still securities and need to follow securities law. And that is the latest Crypto Daily Download headlines.
Let's get to the big story breakdown. In New York morning trade, we are looking at Bitcoin pulling back a little over 2% and holding below the 70,000 level. Now, instead of breakouts, we keep seeing what some may call yet another failed rally. While behind the scenes, TradFi integration is in an absolute sprint. And crypto faces a perfect storm. Nearly $15 billion worth of Bitcoin options are set to expire on Deribit, representing almost 40% of their total open interest. The expiration does align with the end of a diplomatic window following Trump's decision to pause strikes on Iran. Well, joining me to talk energy, all types of energy, is Andy Baer, Managing Director of Asset Management at GSR. Andy, great to have you here. Thank you so much for joining me.
It's good to be back, and I'm going to take a quick look to make sure I get this quote right. One of my colleagues at GSR said this was the noisiest crypto bear market he can remember, and that basically sums it up. As you did in the introduction there, you know, Bitcoin's still around 70,000, Ether's still a little over 2,000, Solana's still, you know, between 85 and 90 bucks. Resilient, we're still at base camp level here. All the action is elsewhere, and so it's from a token watcher and investor point of view, it's requiring even more patience. But at the same time, the news flow is almost deafening.
Mm-hmm. Yeah, absolutely, because if we look away from our monitors or devices for even 30 minutes or an hour, we know there have been different updates. And The verification process is also something that we need to keep our eyes on when it comes to this news flow that is coming out from the conflict in the Middle East. But at the same time, when it comes to what we're seeing across the digital asset space, this week it was a busy week here in New York City with Digital Asset Summit 2026. So tell us what's really happening below the surface.
Yeah, we're getting, I was telling you when we were prepping, people are coming up and pitching us on all kinds of ideas. GSR is a big market making firm, so people are saying we need market making services. We're building an asset management business. We need asset management services. I got pitched to by DeFi people. I'm not sure what I could offer them right away, but they were really excited to tell me about what they were building in as far distant industries as Bitcoin layer 2s and the film industry. So there's a ton going on. These big name integrations with Invesco and Franklin Templeton, matching up with Superstate and Ondo, these are huge, right? And this idea, there were 8 Kraken announcements, right? Tokenized equities, DeFi yield vaults, and actually a crypto-native structured product integration with a Swiss firm, like all in a couple of days. So it is extremely noisy. There's a ton of product being built. We hope that the demand will be there, but in the meantime, investors who are sitting there allocating to crypto have just, for most of the last 6 weeks, just had to be super, super patient.
And we are heading into a new quarter next week. So when we take a step back and look at Q1 price action for Bitcoin, tell us where we are.
Well, this is, we can pull up the chart that we had talked about a little bit before the segment. One of the most encouraging things that I'm seeing is that when the market has these attempts at rallies, right, Ether tends to do pretty well. So on a day like today when things are pulling back, you kind of wish that you were all else equal being in Bitcoin, because Bitcoin is going to be kind of the safe haven in the context of crypto. But when those rallies start to come out, those green shoots come out, you see Ether ahead. So if you look at the Ether to Bitcoin ratio, you'll see that it increases at the kind of time when the markets are pumping, right? And if last year was any indication of that, that's a sign that breadth can follow. That's the sign of a healthy market to me anyway. So that means that your sort of Bitcoin, Ether, Solana kind of core portfolio should be able to pulse well on the layer 1 side when things are good. You kind of want to be more towards Bitcoin when things pull back. Of course, we've gone nowhere for 6 weeks, so we'll see how this theory tests. But the other point you brought up about the quarter ending is really important. You and I have talked about how Bitcoin has this attention span of a quarter. We've actually done some work on this, and there's something to it. So let's see what happens after March 31st if the chapter turns, and that might just be enough to get some energy back into the market.
Yeah, and looking at traditional markets here, of course, we know when it comes to the equity markets, traditional trading hours are Monday through Friday and are from 9:30 a.m. to 4 p.m. And I understand that over the weekends, you have been paying attention to S&P 500 perp action on decentralized exchanges. So we know there has been plenty of activity ahead of the market open on Monday. So what's going on?
So this is, I think it's a phenomenal thing that happened very, very quickly, that S&P actually licensed its yellow box Cheerios, its S&P 500, to Hyperliquid, to actually a platform on type of Hyperliquid called Trade XYZ. Equities here on the New York Stock Exchange close at 4 p.m. Futures close at 5 p.m. And then futures open up again on Sunday night, New York time at 6 p.m. Growing up watching those futures, Sunday comes around, you get a case of the Mondays and you're waiting for 6 o'clock, and that's when the market really opens, Sunday night. But this past weekend, for the first time, I could watch S&P trade all weekend, and to see it, how it kind of hung on right as the futures were closing on Friday, and it kind of hooked back up with when futures opened Sunday night with pretty good volume. And I checked this morning, there's about 100 million of open interest for a 1-week-old perp contract. It's phenomenal. So I don't know if that kills our weekends for the rest of our lives, but certainly the velocity with which that was put together and adopted was really quite interesting. And now we have oil markets, gold markets, and equity markets pretty tradable all the time. So hopefully those can absorb weekend shocks alongside Bitcoin and other crypto native assets, but also just incredible to watch and just incredible innovation.
And Andy, less than 60 seconds here, but you and I have been attending side events as well as going to the Digital Asset Summit itself. And there has been TradFi, DeFi, policymakers, builders, and everyone in between. So what is the sentiment right now?
The sentiment is that regulators are really trying to do their best to do what's sensible. You know, the harmonization between the CFTC and the SEC, the availability of the commissioners to speak on podcasts and to articulate their views, the common sense of the tokenization rules and the definitions. My colleague, actually the same colleague who came up with the quote earlier, Josh Riesman, had a great op-ed out on X the other day about how to interpret those definitional rules. It's clarity. It's not the Clarity Act, which still remains a bit muddled in this stablecoins reward kind of stalemate. But it is clarity, and the builders are coming in and saying, okay, now I know what I can do, can't do. Now when I want to have to register or don't have to register, these are the safe harbors I can use. And it's joyous, right? It just means that a lot of activity has swum all the way back to the United States. So this will take time to move through the system, as will the integration steps from the other side of tokenization and clearing and collateral management and things like that. But gosh, I'm almost a little surprised that prices aren't more elevated based on the enthusiasm. Feels like a coiled spring to me.
Well, Andy, always great talking to you. Next time you're back on the show, it'll be Q2, so we can look back on this quarter. So thank you so much for joining me today, Andy.
Thanks, Remy.
Thank you.
Still to come this hour on Market Movers, a look back at this week's Digital Asset Summit 2026. And you probably haven't heard, but there's a security that's ripped well over 1,000% since its New York Stock Exchange IPO last week. We'll get the fund's CEO's thoughts on the moonshot. All that and more when we return.
Welcome back to Market Movers, the opening bell. Well, FinTech TV's Market Movers team has been on the ground this week, broadcasting from Blockworks Digital Asset Summit in New York City. And while there, I spoke to Ian DeBoe, Chief Strategy Officer for Ondo Finance, to hear about Ondo's latest announcement with Franklin Templeton. Take a look. Welcome to FinTech TV. Here at Digital Asset Summit 2026, tokenization dominating conversations. Well, Franklin Templeton announcing a partnership with Ondo Finance to launch tokenized versions of its ETFs. This enables 24/7 trading directly through crypto wallets without traditional brokerage accounts. And Ondo is tokenizing 5 of Franklin Templeton's funds. Joining me to break this down is Ian DeBoe, Chief Strategy Officer of Ondo Finance. Ian, great to have you here. Thank you so much for joining me.
Thanks for having me.
Well, you were just on stage announcing this partnership with Franklin Templeton. So walk us through the details.
Yeah, so Ondo as a company, we put traditional financial assets on crypto rails. We started doing that about 3 years ago, first with treasuries, then with stocks, and now ETFs. We have built a distribution network so that globally hundreds of millions of investors that only really have a crypto wallet or a crypto exchange account can now access institutional grade products in US capital markets. That includes stocks that are already live, and now also 5 ETFs from Franklin Templeton, so that really a global investor audience that historically has struggled to get access to US capital markets can now access institutional grade products that historically they just haven't really had access to.
And walk us through the finer details of this partnership. You mentioned these five ETFs from Franklin Templeton. So, how did you whittle it down?
Well, honestly, we rely on Franklin Templeton's expertise to basically suggest what they think is a good fit for this crypto native audience, because it is different than what traditional finance is used to, right? These are hundreds of millions of people that live offshore that have had access to Bitcoin and other cryptocurrencies, but don't necessarily really know even what is an ETF, right? And so they try to, I think, select these ETFs that are tech oriented, growth oriented, gold ETFs, right? Things that people in a crypto native audience can truly wrap their head around. That's where we start. That's obviously not where we're going to end. The partnership with Franklin Templeton involves them also designing more custom products down the line to really figure out what do these crypto native investor needs in order to further diversify their portfolio, put that into a model portfolio or another types of ETF, which we can then continue to tokenize and put it into the hands of these investors.
Yeah, and you bring up an important point because when we think about the target audience here, they may not be monitoring the close of oil futures as closely, or even looking at what's happening in terms of futures. So when you're talking about timeline as well as what could be coming down the horizon, give us an idea of what you've been hearing from these crypto natives.
Yeah, I think, that right now in crypto itself, it's a little bit of a bear market. Crypto prices are pretty depressed. There's a lot of macro uncertainty. So we do see that people aren't necessarily sure exactly what to invest in. Bitcoin is pretty familiar, but is also a little bit depressed. Gold has had a very interesting rally. Silver had an interesting rally, but both of those assets are now starting to go down as well. There's a lot of talk about tech and whether or not that's overvalued. So people aren't exactly sure, quite frankly, what to invest in, which I think points people more and more to say, hey, why don't I have a model portfolio that gives me diversified exposure to both crypto as well as stocks, ETFs, commodities, and all these sorts of things. But how do I get access to that in the investment portal that I'm used to, being the crypto wallet? And that's why Ondo making these products available in these crypto wallets really is a transformation for a lot of these investors offshore. They really have not ever had the experience and the ability to invest in these model portfolios and diversified portfolios. So that's why I personally get quite excited to really give access to US capital markets, institutional grade products, Franklin Templeton products to these investors so that they can build a diversified portfolio and have, quite frankly, a little bit less volatility in their lives.
Well, volatility has been the key word in 2026, not just in crypto, but also across all asset classes. So even when we're looking at equities, it's not just the US equity market that's seeing volatility, it is global markets, whether we're talking about emerging markets or even European or Asian markets as well. So a lot to keep our eyes on. And for investors out there who are trying to find their way to access the US capital markets, they have a lot to learn and digest. So when it comes to the future of this partnership, can you tell us what you envision?
Yeah, I think you mentioned already, first and foremost, we have to start educating these users, right? Franklin Templeton, as an asset manager, has a lot of experience in explaining what do these products do? What is the return profile? What can you expect? So I think it starts with user education and bringing these institutional grade products, existing ETFs, on chain, make them available, get people to understand what is this in the first place, and then allowing them to invest 24/7. I think what's next is using these public blockchain rails and the technology that has really matured up to the level where people are going to be very capable and able to choose custom investment portfolios, right? The ability to almost create your own ETF or create your own basket of investments. All of that process becomes incredibly easy and 24/7 once you deal with these tokenized stocks and ETFs. So I think over the next, call it 6, 12, 18 months, I think you'll see large asset managers really look at this infrastructure and say, what kind of investment products can I now create in a seamless fashion that can trade 24/7 that before on traditional financial rails, I couldn't really do? How do you think about model portfolios that include both crypto, commodities, and stocks and ETFs all combined and having them trade 24/7? I think that ultimately is where we're headed next.
Yeah, and you mentioned a lot of key themes that we're watching here at Digital Asset Summit 2026. And last time you and I sat down, it was right before the Ondo Summit kicked off. So a lot has happened since then. So give us an idea of where Ondo is heading for the rest of 2026.
Yeah, it's been a very exciting couple of months. We've had distribution partnerships with Binance, with BitGet, with Gate, with OKX, large crypto exchanges. Think of them as like the Coinbase of Asia, so to speak, to really have these distribution pathways to make these stocks, ETFs, other investment products available to the people who have that crypto exchange account. We've seen a tremendous growth in our assets. I think at the Ondo Summit, we were at like 400 million in tokenized stocks and ETFs, which is more or less double that in less than 6 weeks. So we're seeing incredible growth. There really is a lot of untapped demand offshore for access, seamless access to US capital markets and instruments that trade 24/7. So that's where we're really focusing. Where we're going next is really leaning into new product structures that can trade 24/7, but include stuff like perpetual swaps. So you'll see more from us in that direction over the next couple of months. Perpetual swaps, broader asset management, model portfolios, really bringing capital markets and prime brokerage on chain in 2026.
Well, Ian, it was great talking to you here at Digital Asset Summit 2026. I appreciate your time and thank you so much for all of your insights.
Thanks for having me.
Thank you. Welcome back to Market Movers, the opening bell. Fundrise's Growth Tech Fund IPO'd here at the New York Stock Exchange last week under ticker VCX, and it has skyrocketed since its debut. Now, investors are turning their attention to the fund for its private market access, and its top 10 holdings include some of the most coveted unicorns, including Anthropic, OpenAI, and SpaceX, and these big players could go public this year. Well, joining me to weigh in this morning is Ben Miller, co-founder and CEO of Fundrise. Ben, good morning. Thank you so much for joining us. Well, your fund VCX soaring since its debut last week. Now, the fund does promise to democratize access to Silicon Valley's most exclusive deals here. So tell me about the unprecedented retail demand you're seeing.
Yeah, well, just to give a little context, we started this fund about 4 years ago. We were the first public venture fund ever to file with the SEC. We created actual access 4 years ago with a $10 minimum. So we have 100,000 individual investors. All of them invest on average $5,000 per investor before we listed. That was before we went public. And so I think that broad-based ownership really helped spread the word and created something like a network effect in terms of how then it was received by the market after it listed.
Well, I do want to ask you about regulation as well. So the SEC under Paul Atkins has previously talked about working to expand private market access for investors. So what would the impact of this be? And do you think retail investors would rather stick with funds such as yours that do serve as an intermediary when it comes to access?
That is such a good question. So I really think that's the trillion-dollar question because there's a huge problem. Private markets have become multi-trillion, $10, $20 trillion space. Most of the growth, most of the young companies are growing in private markets. Everyday investors have been excluded now for the last 15 years. And I think that VCX has created the model. The model is a low-cost 40 Act, like mutual fund structure that gives everyone access to private market companies in a regulated wrapper. And you're seeing from its trading, from the reception, that it's actually really well received, and it's probably the best solution for how to do this. So I think it's a solved problem, actually, and now it's just the main question is how do you get more people to realize that this is the way to address this long-standing iniquity.
Yeah, and Ben, finally, when the companies do actually go public, names that we're watching like SpaceX, OpenAI, as well as Anthropic, where do you actually start looking for value then once these names go public?
Yeah, I mean, over the last 20 years, I would say 99 out of every 100 new companies were created in the private markets. it's something that will always be the case, I believe. And so they'll be the next Anthropic, the next SpaceX, the next OpenAI. AI is unlocking a whole new paradigm of value creation, of new kinds of technological innovation. And so, one of our recent investments was a pill that extends lifespans in dogs. So imagine if your dog could live 5, 10 years, 3, 5, 10 years longer. I mean, that sounds like an incredible blockbuster technology. And so there's going to be more technologies, more investments, and the whole idea is that you create venture capital as a category in your portfolio. The way you have real estate or you have tech, venture capital should be a percentage of your portfolio in a low-cost, well-regulated wrapper.
Well, Ben, we have to shift our focus back to the public markets now. So thank you so much for joining us, and thank you so much for sharing your insights.
Thanks for having me.
Well, ringing the opening bell here at the New York Stock Exchange this morning is IR Impact. Take a look. That was the ringing of the opening bell to kick off Thursday's trading session. And now let's see where U.S. markets have opened. We are looking at the Dow Jones Industrial Average pulling back by 0.5 percentage point this morning, while the NASDAQ and S&P 500 are also in negative territory. Right now, we are looking at the NASDAQ down a little over 250 points, pulling back by a little over minus 1.1%. As for the S&P 500, that index is seeing red as well and is down a little over 0.7%. As for the NYSE Composite Index, which tracks all companies listed here at the New York Stock Exchange, that index has also opened lower, pulling back by a little over 130 points or 0.6%. And taking a quick look at oil prices this morning, we are looking at WTI in a positive territory, advancing by about 4%. Right now, we are looking at WTI hovering right below $94 a barrel.
Now that the markets have opened, we'll get a capital markets update for you from Bankrate economic analyst Sarah Foster, live on the floor of the New York Stock Exchange, when Market Movers comes right back.
Welcome back to Market Movers, the opening bell. While all eyes are squarely on geopolitics as well as the market reaction. Now, the inverse relationship of equities and oil, all based on the tug of war of negotiations, as well as the progress and potential setbacks over the conflict in the Middle East. And Fed funds futures remain in focus as global central banks do grapple with the prospect of higher for longer oil prices. The national average for a gallon of regular gasoline in the U.S. now stands right below $4 a gallon. And higher energy prices are also creeping into supply chains and could hit the bottom line. Well, joining me to weigh in at the New York Stock Exchange is Sarah Foster, analyst for Bankrate. Good morning, Sarah. Great to have you back.
Good morning. Thank you for having me, Remy.
Well, here we are this morning. We are looking at U.S. stocks down and we're looking at oil prices back up. So tell me how all of this affects inflation when it comes to geopolitics.
It is certainly something that the Fed did not want to see. It does not help them. For the past 5 years, they've been fighting this inflationary fire, and then a supply shock has happened that really makes that 2% sustainable path towards better inflation difficult. I would say, we're really on the cusp of seeing $4 a gallon retail nationwide. And if you want to know what kind of effect that has on CPI, the headline inflation rate, that could, of course, push CPI up a full percentage point, which is the opposite direction that the Fed wants to see. The Fed just a few months ago was in this situation where they were wondering, when could they get back to cutting interest rates? And now the big question is whether they'll be able to at all.
Yeah, and you bring up an important point because central banks around the globe have a lot to contend with when it comes to inflation. And you also mentioned how this could creep in, and it's not just American consumers or consumers around the globe that are worried about energy prices, it's corporations that are affected. So when it comes to the central banks, how are you factoring this into the rate outlook moving forward?
This is something, in economics, it's kind of a chicken or the egg debate whether this is a supply shock or a demand shock. Oil, of course, starts out as a supply side issue. That would tell the Fed, they can't obviously drill for more oil, they can't open up the Strait of Hormuz, but it maybe tells them to be patient. However, since we've been in this situation where inflation has been, uncomfortably high, above target for the past 5 years now, it certainly compounds on the issue here. What I think is going to happen is you're going to see hawks get more hawkish, you're going to see doves get more dovish, because the other side of the coin here is many households are feeling stretched financially long before we were seeing $4 a gallon gas. Of course, if that pulls back on consumer spending, if households start to adjust their budgets, that could be that demand shock that we've been worrying about. And of course, that's why you're seeing many recessionary odds go up as the war in Iran has begun. I think even for households too, we're wondering if the Fed, how that could impact them. I think whispers of the Fed eventually having to raise rates, it's not our base case, and I think, you've also seen expectations in the markets rebalance a little bit, but certainly when you look at the interest rates that we track at Bankrate, including mortgage rates, they're already creeping up whether the Fed has started to talk about rate hikes or not.
And another area that Americans are paying attention to is rates and borrowing costs. So I do want to get your take on what we're seeing in terms of housing and mortgage rates.
Well, 4 months ago, we put out an interest rate forecast, and we were kind of hoping, this was the year that we might see sub 6% mortgage rates. Of course, we saw that briefly for a moment 4 weeks ago. Of course, that was interrupted by the war in Iran. Over the past 4 months, or over the past 4 weeks, we've seen mortgage rates creep up. The most latest data, the recent data that we have at Bankrate, it's about 6.44%. If you want to know just how much that impacts households, over the course of a year, the monthly payment of that higher mortgage rate translates to an extra $1,000 for someone who were to buy a house now, as opposed to when mortgage rates were briefly below 6%. And that's a big deal for many households, and especially heading into that crucial spring home buying season as the housing market was really frozen. It's probably going to take a little bit of air out of the room, but of course, the importance is shopping around and making sure that you can get the best rate possible.
Yeah, and speaking of shopping around, we know that inflation can creep into spending. So when it comes to the economic outlook for the everyday American out there, what should they keep in mind?
It's difficult. Shopping around often requires visiting multiple stores. Of course, that's not really an easy thing to be doing when gasoline is going up as fast as it is. I think it's one of those times when it's crucial to look back at your budget, make sure you know what you're spending money on, see if you can calculate your own personal inflation rate by going back and noticing which costs you yourself have increased, and then at that point it's time to start talking about substitutions. The big fear about higher oil prices is that it could creep into other sectors, groceries, household utilities. Of course, we've been hearing from households for months now that food and those home heating costs, electricity, those have all been going up as well.
Yeah, and before I let you go, Sarah, it's hard to believe, but next week is April, and that means we'll start looking ahead to the labor employment report. So what are your expectations as we count down to the upcoming non-farm payrolls?
Yeah, we were all very taken aback by that February report. The payrolls number was a lot weaker than expected. I think there is some hope here that some of that was weather related, and you could see a little bit of a bounce back, that the labor market hasn't, of course, taken as sharp of a turn as it looked like it did a few weeks ago, but that all, of course, is going to depend on how the conflict lasts. I hear from business owners, from employers, that it's very hard to plan for the future, to know how to budget for wage increases, how to budget for more people on your staff when you just don't know what the economy is going to look like a few months from now.
Well, Sarah, I appreciate your time. Thank you so much for joining us, and thank you so much for sharing all of your insights.
Thank you for having me.
Thank you.
One of the world's biggest payment companies is embracing crypto. We'll get you caught up on Visa's big announcement from Blockworks DAS when Market Movers, the opening bell, comes right back.
Welcome back to Market Movers, the opening bell. We've brought you live coverage from Blockworks Digital Asset Summit over the past few days. And while their Visa made a key announcement with the Canton Network, I spoke with Rubail Birdwalker, who is Visa's global head of growth products and strategic partnerships, to help break the news of this partnership. Take a look. Welcome to FinTech TV. The biggest roadblock keeping traditional banks off the blockchain has been privacy. The same transparency that makes the technology so revolutionary is often a complete deal breaker for institutions bound by strict compliance rules. Here at Digital Asset Summit 2026, Visa announced it is joining the Canton network as a super validator, becoming the first major global payments company to help secure this privacy-focused blockchain. Well, joining us to discuss this major milestone for institutional adoption is Rubal Burwadkar, Global Head of Growth Products and Strategic Partnerships at Visa. Great to have you here. Thank you so much for joining me.
Thanks for having me.
So first and foremost, this announcement that was just announced at Digital Asset Summit, walk us through this and tell us what it means to be a super validator on the Canton network.
Yeah, it's I think you covered it in the intro, which is we really believe privacy is a central tenet that will help ensure a lot more broader institutional adoption of stablecoins, especially as it relates to payments. And what we really like about the Canton network is they have a composable architecture, which is really privacy first, with like very specific modules about data that they can make available, but not by default. And there's a lot of like positive things that we see in those characteristics, which is one of the reasons why we decided to join Canton as a super validator, so we can help govern that network. And we bring in an enormous amount of regulated payments expertise to chains like Canton, especially when it comes to network resiliency, and we obviously carry a lot of trust and credibility with our banking and financial institution partners. So our goal is here that with us playing a much stronger role in governance as a super validator, we can bring that trust, reliance, operational resiliency to the Canton network, and hopefully that can help allow more assets to come on payments, to come on chain, with privacy being one of the crux and most important critical elements.
And two things you mentioned there, Rubal, stable coins as well as privacy. So walk us through the privacy part of the equations.
Yeah, I think the simplest way to think about it is privacy is fantastic until you actually have to expose your liquidity positions. Say you want to pay salaries using stable coins. It's a lot easier if you're not sort of like, you have the option to actually not making it public, or your liquidity positions, or where sort of like, what sort of collaterals, how much of that do you want to expose or not. And ultimately, I think public blockchains have done an enormously fantastic job to show the power of what stablecoins can do, both from a instant settlement, 24/7 sort of like availability, global accessibility. But I do think that as this becomes more and more mainstream, to get more institutional adoption, privacy will become an important tenet of stablecoins.
Yeah, and speaking of stablecoins, I do want to ask you about stablecoin payments, especially when it comes to Visa, especially as a global organization. So for our viewers, can you walk us through what's happening?
Yeah, look, from our perspective, we believe this is a incredible technology which has an enormous amount of potential, and the stablecoins can provide a much more efficient infrastructure, and especially in markets where like digitization still hasn't sort of like reached the borders. What we've done on stablecoin, and I shared a little bit about this earlier in my talk this morning, which is we were one of the first networks to enable settlement by our partners, many of them regulated financial institutions, to settle into VisaNet on stablecoins. And we've been doing that for a number of years now. We have several $1 billion in circulation that we're doing on stablecoin settlement. Additionally, we the pioneers of stablecoin linked cards, and today there are over 130 programs that issue Visa related to stablecoin linked cards in more than 50 markets around the world. So for us, it's less of a future potential. We already see it working at scale for like billions of dollars of like payment volume through multiple use cases. We also recently announced some of the pilots that we're doing in our Visa Direct business for payouts and pre-funding. So we remain incredibly excited and positive about stablecoins.
Yeah, and finally, before I let you go, I do want to ask you about other partnerships, because when we think about Visa, it is a brand that is recognized around the globe. So tell us about the partnerships.
Yeah, look, I think partnerships for our business are like, it's a fundamental, ultimately we're a B2B business, and a B2B business is only as good as how, what sort of partners do we have around the ecosystem. And the same is true in the crypto space. I think we've been public about our participation as a design partner with Tempo. We've also been pretty public about the work we're doing with the ARC team. They're just sort of coming on to the testnet. And we continue to make a lot of essentially our view is this is a game where we continue to be deeply engaged with the partner ecosystems across the entire stablecoin stack, whether it's L1 chains, L2 chains, whether it's, orchestration providers, whether it's, wallet infrastructure providers. And obviously we bring together a deep network of, nearly 15,000 banks, nearly 200 million merchants, and nearly 5 billion Visa credentials around the world. So it's every incremental partner that we add, we believe we add an incremental compounding opportunity for growth.
Well, Rubal, it was great talking to you here at Digital Asset Summit 2026 in New York. I appreciate your time as well as all of your insights.
Thanks for having.
Thank you.
We've covered it all week. Blockchain is expanding through digital dollars and tokenized stocks. We'll get Starkware's Catherine Kirkpatrick boss's perspective on this when we return.
Welcome back to Market Movers, the opening bell. Right now we are looking at the Dow Jones Industrial Average turn higher after a sharply lower open. Right now the Dow Jones Industrial Average is trying to eke out a small gain of about 30 points. Meanwhile, the Nasdaq remains lower and off by a little over 150 points, while the S&P 500 is still down, pulling back by minus 0.4%. Meanwhile, we are looking at crude oil futures holding session gains. Now, digital dollars cover two main buckets, including private issued stablecoins and central bank digital currencies, but a roadblock does remain. Traditional blockchains are public, meaning every transaction is visible, but retailers, corporate treasuries, and energy traders may not want pricing or strategy revealed. So how do we make digital currency private enough for enterprises but transparent enough for regulators? Well, here to discuss the future of financial privacy on-chain is Catherine Kirkpatrick Boss, General Counsel for Starkware. Catherine, great to have you here. Thank you so much for joining me.
Thanks for having me.
Well, we know that when we're talking about chains, privacy is important. So for financial institutions, why is it so important?
Well, you have an environment where everything is moving on chain. You're real time seeing markets move on chain in large part due to tokenization. And this is all great. In theory, there's massive advantages with cost, speed, atomic settlement, etc. But the problem is markets as they stand are not visible. You don't have proprietary trading strategies visible to the average investor. You have potential for abuse with that kind of transparency. So this is an impediment to getting a critical mass of trading and market movement on chain where it is transparent.
Yeah, and we're talking about a highly regulated space. So the question is how?
It's a great question because for a long time, privacy was a bad word when it came to regulators. There was an immediate association when you're talking about privacy with money laundering, with mixers. We've seen some signs of hope on that front. The SEC convened a roundtable on financial surveillance and privacy to discuss this, and Chair Atkins at that roundtable specifically said that individuals interested in privacy technology, there should not be a negative association, and builders building privacy technology should be allowed to do that. However, institutions are still a little wary of engaging with privacy technology generally because they know that could be a lightning rod for bad guys.
Yeah, and speaking of the regulatory landscape, while I have you here, I do want to get your take on some of the conversations that are taking place on the nation's capital regarding this. So there's been a lot of back and forth, and of course all of us are looking for clarity. So where are we right now?
Well, we're hoping for basically a compromise on the yield provision. The banks and the crypto market participants are quite far apart. We've heard rumors that there is some sort of potential compromise resolution where basically the mediators in the room are saying neither of you get what you want. This is still a priority for the administration, so I would say crypto as an ecosystem remains cautiously optimistic and hopeful that we will get legislation, but there are also a number of macro factors. Obviously, this is not the administration's number one priority right now, and some impediments along the way to getting that legislation.
Yeah, and indeed, all of our focus has been on the geopolitical tensions in the Middle East, and that is something that continues to affect all markets and all asset classes. But you mentioned tokenization, so I do want to get your take on securing the 24/7 market. So usually Monday through Friday, the equity markets open at 9:30 and close at 4. But given all of the volatility, there has been a lot of focus on futures on Sunday evening and also on perps. So how do we actually go about securing?
It's the absolute ultimate unlock, right? And that's a big argument. Some people will say, well, why is 24/7 trading good? Like there's negatives to 24/7
Yes.
trading. But we're in an increasingly global market, right? And the need to hedge in times of great volatility, like we're seeing real time, it's becoming more and more important. And you also decrease capital risk and counterparty risk with tokenization by enabling real-time settlement, and you cut costs. So I think tokenization has always been an incredible crypto use case for traditional financial services because it's very easy to understand in the abstract the advantages of putting something into a mechanism that is immediately tradable, easily tradable, cheaply tradable, as opposed to a lot of, frankly, the logistical impediments that exist when the assets are not tokenized.
Yeah, and finally, before I let you go, for the viewer out there who's trying to figure out the importance of privacy and digital dollars, what would you say to them in a nutshell, in layman terms?
Well, look, when you think about privacy, everyone is entitled to privacy, and for a long time, the U.S. has lost the thread on privacy. Privacy should exist in the U.S. because it's a fundamental right to express our morals and values and have privacy as a mechanism to do that. And I'm talking about charitable donations or healthcare spend. If that's on chain, an individual doesn't get privacy. Privacy is also really compelling from a payment perspective. It's really interesting. A lot of crypto companies will pay their employees in stablecoins, in USDC. And that's incredible. Think about living in South Africa with the Rand or living in Argentina and getting paid in USDC. That's fantastic. It's life-changing for those individuals. But do we want that on chain? Absolutely not. You don't want everybody in your company to know how much you're getting paid. So that is the next unlock for the true usability of markets and multiple use cases on chain.
Well, thank you so much for joining us on a busy day. I appreciate your time and all of your insights.
Thanks so much for having me.
Thank you. Well, nearly 30 minutes into today's trading session, and we are continuing to keep a close eye on all asset classes. Now, starting out with the Dow Jones Industrial Average. Right now, we are looking at the Dow turning flat, but it did eke out a small gain. And of course, we'll continue to monitor the index. Now, earlier, the Dow was led higher by software names, including Salesforce, as well as Cisco and IBM, which is moving higher. As for the Nasdaq Composite and the S&P 500, we are still looking at red for both of those index, with the Nasdaq Composite Index pulling back over 150 points this morning. Meanwhile, the S&P 500 does remain in negative territory. We are looking at the index down by nearly 0.4%. As for the NYSE Composite Index, which tracks all companies listed here at the New York Stock Exchange, we are looking at that index down by a little over 40 points, pulling back by about 0.2%. And in terms of oil, we are looking at crude oil futures still holding gains. And that does wrap it up for Market Movers. Thanks for watching and have a great day.